Good morning, ARMR Insiders. Everyone who's watching right now, I appreciate you spending your morning with me. Let's get our day started. This is the morning meeting of our virtual hedge fund. We're going to talk about stock market, big picture, risk monitor, why. Let's talk about the stock market because that's what this is about. I'm not going to spend a second on the debates last night. I don't care who maybe won or didn't win or who said what. Total waste of time, doesn't affect how I run money, won't change our process of when to add risk and when to take risk off. Highlighted group today. So I'm trying to remain even keel. Now I'm going to talk about the highlighted group and stocks of the day today, which are decidedly bearish. Take a look at this chart. This is JP and Goldman Sachs, two Dow stocks. Now, I spoke to you yesterday about how the Dow was showing relative outperformance. The Dow doesn't look too bad there. It's relatively outperforming the NASDAQ 100, even the S&P, right? The weighted S&P index. And one of the primary reasons that the Dow is outperforming is the financial sector. I would call it one of the last legs to this wobbly stool of a stock market. It's been the financial strength. It's just been incredible. Yesterday was a major shot across that bow. JP had a big down day, some pretty nasty things Jamie Dimon was talking about. Goldman Sachs followed. If you want to get bullish, you would say it's going to hold this third line, reverse, and try to go higher again, right? But this looks incredibly bearish to me. JP Goldman Sachs, or Dow stocks, they're breaking down. But again, I have to hesitate and say to you, until it literally breaks down below the 50 and below the uptrend of this pennant, we have to keep the pennant really white. It's not really red yet, right? If it can hold in here and break the upside, then things are bullish. So I highlight this for you. I highlight Goldman Sachs, JP because they look awful here. And if they extend lower and close the week breaking down, it's another reason why we have so much cash in the portfolio and why the risk monitor stays red. At the end of the day, we got to read and react to what we see.